Good afternoon. This is Oliver Slow, Blue Line Futures. Today is Wednesday, May 7th, and it is a big day in the markets, and that really started in yesterday afternoon's trade. Yesterday, after the market closed, we got rumors and news that Bessent would be meeting with Chinese trade delegates in Switzerland this weekend, and that really kicked off a little spike in volatility in some of these outside markets. Looking at gold, that put immense pressure on gold right out of the gate, basically trading in an $85 range over the last 20 hours in that market. And conversely, you see stocks rally sharply on the back of that headline, but giving a lot of those gains back mid-morning today, which goes back to what we talked about at the end of last week, which is that the market's at a point where it knows that these trade talks are happening, not just with China, but other countries as well. Now it's to a point where we actually need to see some substance that lives up to those expectations. Now, from a technical standpoint, all eyes are on that 200-day moving average, which we talked about last week. Basically hit that to a T in the NASDAQ on Friday. Between that 200-day moving average and the March highs about 200 points higher, up at 20,500. I think that's going to be a huge inflection point for the market. Now, we do have a Federal Reserve meeting out later this afternoon. Our head of research, Dan White, will give a live update on that as soon as it comes out. So we don't know what the Fed's going to say yet. Dan will give us an update here in just a couple minutes on that front. But that's going to have a huge impact on these outside markets, I think, through the rest of this week's trade. Now, over on the oil market, we saw a big gap lower Sunday night on the back of the announcement from OPEC that they were going to increase production by 411,000 barrels per day. That was largely anticipated in what was reported on through most of the week, and I think the price action confirms that. We traded as much as about $5 off of that Sunday night low in today's trade, getting out above $60 briefly, but reversing a little lower here mid-morning. Now that $60 level, that's going to be a big barrier for the bulls to overcome here in the near term. If they can do that, potentially we get additional relief into the mid-60s. Now on the agricultural side of things, it's been relatively mixed so far this week. For a closer look at something on our radar in that space, I'll turn it over to market strategist Matthew Bresnahan, aka Matty Candlesticks.
Thanks, Oliver. This is Matt Bresnan, market strategist with Blue Line, coming to you guys with the chart of the day. We are looking at the July-December corn calendar spread. Now, the reason that this spread is important is because it relays the relationship between old crop corn and new crop corn. We've had really impressive performance in terms of exports on the old crop corn product, and the balance sheets remain very tight. Now, the contraction in this calendar spread is interesting for a couple of reasons. First and foremost, we are anticipating over 95.3 million acres of corn being planted this year. Considering how tight old crop supplies are, you would expect this price relationship to widen out back towards that 30 to 35 cent range. And the other thing, if we're looking at the momentum signature is represented by the RSI towards the bottom of the chart, you can see that even though price is reaching near the same lows as we did on March 4th, that the momentum is not falling in accordance with that. You'd call that is a bullish divergence. So what this represents is that we may be nearing a critical support pocket in the July-December corn calendar spread here and now. Kicking it back to you guys. Thank you.
Thank you for that, Matty Candlesticks. Now, coincidentally, I was talking about that same spread with our branch office in Nebraska earlier today, Ben Rand. And it's almost like cancellations are expected to come down the pipeline the way that spread is traded. But regardless, it certainly makes that a little bit more attractive, and you did a great job articulating why that looks attractive. I'd also say that DEES 24, DEES 25 has also popped up on our radar for similar price action. All right, it looks like the Federal Reserve decision is out, and to the surprise of very few, it looks like they left things unchanged. The initial market reaction, relatively mute to a little bit of weakness here shortly after the headline came out. Headline indicates that the Federal Reserve acknowledges the increased risk of higher unemployment and higher inflation. For a deeper dive on today's Federal Reserve meeting, I'll hand it over to our head of research, Dan White.
Hey, Oliver. This is Dan White, head of research here at Blue Line. Thanks for having me on. Of course, I have to follow Maddie Candlesticks with NZ Corn Spread, which is my favorite trade on the board. But just going through the Fed, it's largely what we expected, not a whole lot of surprises. They held firm. They reiterated their kind of wait-and-see attitude. And that's largely what we've seen in the data, right? It's a dual mandate. They have the labor market, and they want to maintain stable costs. So from what we've seen, we've had a resilient labor market. And on top of that, we've had this sticky inflation for some time, and that's before this tariff situation took place. So the Fed right now, they recognize that they're facing pressure on both sides of the mandate in a situation where we could see, an economic slowdown, rising inflation, and potentially increases to unemployment. So in the notes, they did hint that they aren't seeing significant inflation pressures from the employment situation. And that's the kind of the one bright spot I take out of that, because I believe if they can lean on the labor market softening being their trigger, if we do get a stagflationary environment and we start seeing unemployment kind of ramp up, we start seeing layoffs, I think that will be the trigger. But all in all, equity markets sold off right after the release. Of course, Trump had some comments right then, so that kind of skewed things. But to me, not a whole lot of new information, just a reiteration of kind of what we've seen in the data and what we've heard from their rhetoric. So we're in the same spot. We've got to just wait and see and hope some trade deals get done. We talked earlier, I think markets need to see action. We've had enough, hints and releases and leaks of potential deals, but we need to see, some deals get done, some progress get made. And I think we really need that to see risk sentiment turn around in a significant way. That's about all I got. I can go on forever, but I won't bore you guys. Let me know what else you need.
All right. Thanks a lot for your insight, Dan. Always appreciate it. And as Dan touched on, really a relatively quiet Fed day. One of the quieter Fed days that I can recall in recent memory. Just not a whole lot of price action. Usually you see a whipsaw one way or the other. Didn't get that today. We saw a little blip lower, but that coincided, as Dan mentioned, with the headline from President Trump regarding Chinese tariffs. Then we kind of went back to unchanged, all eyes on economic data going forward. We did get a little news here in the last few minutes into the equity market close that Trump was going to rescind global chip curbs amid AI restrictions. So a strong close and a reminder into the close that we are in a very headline-driven market with risks to the upside and downside. So be sure to stay nimble and manage that risk. If you have any questions at all with regards to basically any market out there, we've got a great team that covers a lot of different markets. You heard from Dan and Matt today. We've got a great team in-house, ready, willing, and able to help. So do not hesitate to reach out. If you want to stay up to date with what's going on in the markets, head over to bluelinefutures.com. Sign up for that free 2-week trial of our daily commodity research, as well as access to our portal, which is updated several times throughout each trading day. Again, feel free to reach out. We are here to help. And remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.